is going on? Welcome to another week of Market Outlook with the Traders Guild. We're going to be going ahead and diving into today what we can expect this week as far as the markets go. Last week, if you watched last week's recording, if you didn't, highly suggest you go back and watch that. Last week, we talked about kind of the higher time frame perspective, what we were looking for on the dollar, and that actually did deliver last week ahead of CPI and FOMC. Wasn't too crazy active last week trading because I wanted to let a lot of that stuff just kind of pass and get out the way. But as far as what we were looking for, we was potentially looking to see the dollar trade lower, down into some discount levels, and we did see that go down. So that is in alignment with what we was looking for. So we're gonna take a look today, recap what they decided when it came to the interest rates, look at what the inflation is looking like, what the inflation reports came out as. And as well as what we kind of expect going into this week. Of course, with the news is looking like for this week, which isn't too crazy, but that's what we are going to be discussing today, right? So quick disclaimer, of course, all content published and distributed by the Traders Guild and its affiliates is general and educational information. None of it is, investing advice or recommendations or anything of the sort. And past performance is not necessarily indicative of future results. You feel me? All right, so we are going to go ahead and dive into the news today. And let me go ahead and make sure that my camera is showing so that I'm in here. We're going to put it down in the corner like so. Awesome. So yeah, we're going to go ahead and dive into our news reports for today. And I'm going to make this a little bit smaller. But as far as this week goes, tomorrow, I guess, Monday is Juneteenth. But sorry to my brothers and sisters. I just think that they put that there to make us feel better. I don't think the banks are actually closed. It's a U.S. holiday, but it is not a bank holiday. So we probably will still be seeing the markets do what the markets do. I don't make the rules. I just work here. Okay, so I'm just letting y'all know, okay? The bank's not going to be closed, so the chart's not going to be closed. Just putting it out there, okay? But happy Juneteenth, right, to all my brothers and sisters. We will have medium impact CAD news, so that's cool. But for the majority of the week, I'm going to focus on 3-folder news, 3-star news, high impact news. For the majority of this week, not like we don't have anything crazy. It's going to be a smooth sailing week. We do have GBP British CPI dropping on Wednesday morning, 2 a.m. London session. So we'll see what that's looking like. But we will have Federal Chairman Powell. So Jerome Powell will be speaking 2 times this week. He's going to be speaking on Wednesday at 10 a.m. and he's going to be speaking on Thursday at 10 a.m. Y'all already know how I feel about high impact news at 10 a.m. Usually we get a crazy move back to maybe the same move we saw 8:30 on at 8:30 a.m. at New York Open. Typically we'll potentially see a trade, the markets trade back to that news at 10 a.m. To that entry back at 10 a.m. and see a volatile move at that time. And anytime I get an opportunity at 10 a.m. for some reason, say that I didn't identify an opportunity at 8:30, 8 a.m., 7 a.m. earlier in the session for some reason, if I do catch an opportunity at 10 a.m., I'm probably gonna take advantage of it, take profits quickly, because I don't really want to, if I'm just doing intraday trading and I'm not taking swing trades or something like that, and I'm not really looking to be in the trade for too long. I'm looking to get in, get my 30-40 pips and get out. So that's what we can keep in mind. However, due to what we're going to look at on the charts today and just the way that I expect things to kind of move, if I identify short-term trade opportunities, so trades that will play out over a day or two, and I get a good opportunity entry around New York Open 7 a.m. or something like that, then hopefully that 10 a.m. news, especially with Federal Chairman Powell speaking, actually just carries us, continues, to push us towards that setup. So that's kind of what it is that I think when it comes to Federal Chairman Powell speaking, and we'll kind of go over what he might be speaking about. But something that may be, you can't really trust him like that for real. Now, outside of that, we will have on Thursday initial jobless claims dropping at 8:30 a.m. Definitely can keep that in mind, as well as British interest rates. It's not on here. I think it might be listed as medium impact news, but British interest rates will be announced this week as well, and I believe that's going to be during New York session. So that's going to be good for GBP. Right here, yeah, I don't know why it wasn't listed on the high impact news, but right here we can see 7 a.m. we're going to have Bank of England interest rate decision, and they're expected to raise their interest rates. I'm not going to lie to you, I'm low-key still bearish on US dollar this week, and of course I'm going to explain why. But other than that, like I said, initial jobless claims dropping 8:30 a.m. on Thursday. I look forward to that because we were at the lowest unemployment rates around that area since 1960s. And a lot of people see that as meaning that the interest rate being raised is not really working, right? Because this is kind of something you got to keep your eye on. Like if they're raising interest rates so that there's less money being spent and flowing through the economy, less opportunities, people working less, but unemployments are really low. It means that even though inflation is supposedly getting lower, it's not really doing what it needs to do. But we are seeing the most jobless claims that we've had, and we talked about this last week, since 2021. So, right? And they started raising interest rates in 2021. So it's like, okay, maybe them raising interest rates is helping because a lot of people are claiming that they're not able to find work. But then when you look at the stock market, you look at the spending, you look at the loans being taken out, like people are still getting money. So we'll see what's gonna go on. And the previous one was at 262. We'll see what this one comes out at. If it comes out higher, then that would be kind of like bad. Like that would affect the dollar negatively if it comes out higher. So like I said, we'll see what that's looking like. Other than that, though, like I said, pretty smooth sailing week outside of Federal Chairman Powell trying to throw a wrench and stuff. And then Friday we will be having PMI services PMI at 4:30 a.m. Okay, that's GBP. Yeah, at 9:45 a.m. we'll be seeing services PMI. So that should be interesting. Purchasing Managers Index, that should be interesting. So we might see a good setup on Friday. Now, like I said, just to recap on last week, we did see CPI, which is the inflation. It is getting lower, right? This is the lowest that inflation has been at over the last since 2020, I think. So since 2020, it's the lowest inflation's been at. We saw inflation go almost all the way up to 10%. So again, it would look like the interest rates being raised is working because inflation is going lower and lower. So we can keep that in mind, right? We can keep that in mind. And outside of that, we did see them hold the interest rates. So that is what they decided to do. Interest rates did not get raised last week, and we did see dollar continue to drop off last week. So a lot of people are optimistic about that, and we'll touch base on that in a second. A couple other things that we saw come out last week is the expected, I believe, the projection for inflation over the next couple of years, right? So, or not inflation, but interest rate. They did do a projection on inflation. We'll talk about that. But the projection rate on the interest rate, and they're projected to raise the interest rate to 5.6, right? So right now we're at 5.25, and they have projected it to still continue to get raised. So even though they held it this time, that's not to say that they're not going to continue to raise it. And like I said, if you're in the guild and you don't know what in the world any of this means, you need to go back, watch my market outlook from last week, or if you go in the forum and search interest rates, you can read the that post about interest rates in the forum. And then other than that, next year anticipated to see them lower it down to 4.6%, and then the year after down to 3.4%, which is still high, like high than a mug, right? But overall bringing it down to 2.5. So very interesting how we are maneuvering, right? It looks like, just to give you guys the writing on the wall, it looks like interest rates don't need to continue to be raised because inflation is coming down and jobless claims is up. That's what it looks like. All right. But it's very convenient that it looks like that. Right. It almost looks like I would be optimistic right now about a bullish market and continue to invest my money in, stocks and tech and businesses, right? It's just really, really looks good, right? And I have pulled up here the last 12 interest hikes here for us that we can kind of check out. And we can see that since March 16, 2022, we've had a hike every single month, right? So we had a hike in March, we had a hike in May of that year, literally 11 months straight up until this month, right? This was the first month in 11 months, almost a year, that they did not raise interest rates, okay? So that is something optimistic when it comes to news and the way that's looking, right? So, of course, right, CNBC News reported that the Federal Reserve holds a key rate at 5% as it evaluates the state of the economy following the lower inflation reading. And the reason for the hold, they state, is because inflation appears to finally be easing, and the Fed wants to assess whether it has already raised rates high enough to tame price increases, right? Again, that they signaled that they will actually be continuing to raise the rates if inflation proves to be sticky, aka if inflation doesn't plummet, right? We want to, the goal is to get inflation down below 2%, down below 1%. So if that's not happening, if it's happening slowly, or if it continues to rise, then they're going to continue to raise interest rates. So we can kind of look out for that. Anything else that was interesting in here? Um, They say that the unemployment rate, which is at 3.7%, is a lot lower than what they expected it to be at. Because, again, and I'll read it right here, it says, I don't really see a compelling reason to pause, aka raising interest rates, because the unemployment rate is still going lower, which means people still have money to spend money. And that would be, that would not be slowing of the economy. If people have jobs, then people are going to invest, people are going to buy houses, and people are going to, spend money, go to the grocery store, all those different things. So yeah, that's all that I derived from this one. There was a couple other things, but I kind of told you guys already when I was talking about the news. This article talks about how inflation is finally going down, but consumers are still feeling the sting of high prices. Basically just going over, again, that even though inflation is going down, a lot of just the price of goods and services isn't really going down, right? Like food cost is still high, housing costs are still high, electricity costs are still high. Like there's a lot of, consumers aren't feeling the effects of lower inflation, right? It's the inflation rate is going down, but the economy is not necessarily feeling that. So is inflation really going down? Interesting, right? And then this graph, I thought this was dope. The graph is showing us that literally right now, and the interest rate at 5.25% is the highest that it's been since 2007, right before the housing collapse, before the collapse of the markets, right? So a lot of interesting activity going on right now when it comes to this, just to be honest with you. A lot of interesting takes. Definitely would say, I mean, you don't need to be aware of the fundamental side of things to make money trading, but it definitely makes me feel a lot more confident and a lot more able to derive my bias when I have a higher time frame perspective of what's going on. So like I just broke down with everything, when it comes, like the other thing that I'll say is that, just like I said last week, when we have higher interest rates, technically the value of the dollar should be going up, right? If we have higher interest rates, it should be harder for companies to hire because they don't have as much capital to pay their employees because they have to pay their debts. It should be harder for people to borrow homes, and it should be harder for people to take out credit card debt because it's harder to pay it back because the interest rates are higher, right? But even though interest rates are at the highest they've been in the last 14 years, the unemployment rate is at the lowest place it's been since 1960, growing economy, right? Credit card debt is at all-time highs, growing economy. NASDAQ is at all-time highs, growing economy. When we look at the value of the dollar, the very first interest rate spike that I showed you guys was in March of 2022, March 16th, which was right here, right? March 2016, and you can see immediately we saw the markets take off. Quarter one, they took off again. Quarter three, quarter two, quarter three, and then going into the fourth quarter of 2022, even though they continued to raise rates, the dollar decreased in value. If you guys think about the concept of supply and demand, right? When it comes to supply and demand, if something is high in supply, the demand for it goes down. When you look at this dollar chart, I want you to imagine this dollar chart being the demand for the dollar, right? So if we're raising interest rates so that the supply of the dollar is lower, aka the demand for it would be higher, then this chart should be a lot higher if the interest rates are working. If the interest rate being higher and higher and higher is working, there shouldn't be so much dollar in supply that the demand for it is actually dropping. That's what you're seeing on this chart. Since October of last year, aka going into holiday season, going into elections, right? We saw the demand for the dollar actually decreasing, which means that all throughout the holiday season, Americans were spending money they weren't supposed to have. We were racking up credit card debt. We were investing in stocks, investing in homes, investing in cars, right? That's what we're seeing on this chart. So from what I'm breaking down, it does not show that they are going to continue to lower the interest rate or that they're going to continue to pause on the interest rate, because in my fair evaluation of the unemployment rate, of the credit card debt, and just the demand for the dollar in general, when we look at this chart, it does not look like people are stressing having a dollar, right? Again, if we go on the higher time frame on the monthly and we look at the last time, that interest rates were as high as they are right now, it was in 2007. Shoot, the demand for the dollar was trash. You get what I'm saying? I think that, as I've been saying since December, you can go back and watch any of the market outlooks, or if you've been here, my overall target on dollar, I see them taking this thing up to the highs of 2001, right? The highs of what was that? That was 9/11, right? I see them taking it up there. And so this just looks like a nice accumulation phase that we're going through on the higher time frame, right? We saw the markets trade down lower. Where did they trade down lower to? Well, we're at a discount area right now, right? We're below the 50%, which means that right now the dollar's on a discount for anybody who would want to buy it, aka the banks, the central banks, whatever the case is, right? The dollar's currently at a discount. So we traded to that level. We're currently trading we traded below sell side liquidity, and now we're starting to see some accumulation, building up orders on both sides. So from this consolidation, either we would see a continued expansion lower, or we would see a reversal, right? And so that's kind of the reason that I stay long term. I'm still looking at that bullish dollar, but since last week, again, when we were looking at the dollar last week, we saw that the market, and the beginning of last week was right here. Monday's open. We saw them break down, come above these highs of June, up into the order block, fair value gap area, take some buy side liquidity, and we were anticipating, after seeing them take the lows here, we were definitely anticipating to see them continue down lower into this fair value gap I have annotated with this red line here, right? And you can see that we saw them trade down to that level. What I did tell y'all on Market Outlook last week was to anticipate potentially seeing the dollar trade at least 50% of the growth we saw in May, right? Because this was the low of May, this was the high of May. I said we will at least to see her drop down to 50% of that before we go ahead and continue to trade higher. And we did see them make that play. So this gray box I have outlined here is the daily, it's the daily order block, right? Daily order block. So we had this drop right here. This was pretty much the open of May right here. We saw them open up May, give a drop, and then we saw them take off, right? So just looking at that, this right here is that daily order block. And we saw them trade back into this order block now, straight into this fair value gap we identified. So I'm curious to see, is this where we'll get support? And if they are going to hold this order block, they wouldn't trade anywhere below this red line here. If we're going to hold this order block, then this red line, I mean, there shouldn't be any trading below that. So that is, that's kind of, that's kind of the idea. If they are going to be bullish from here, they shouldn't go any lower than 101, 460, 40, 46 area. Now, going down to my short time frame on the dollar, though, we did see a fair value gap formed when the dollar dropped down last week. We did see them form a fair value gap here. So there's two ways we can use this fair value gap, and that we can look at this fair value gap. It's either they're going to leverage this fair value gap as resistance, right? If we pay attention to where the week opened up, and one thing that I would pay attention to, and I'll be paying attention to going into tomorrow, is where after midnight, because midnight is like our official week, the week opens. So after midnight, do they give us a sharp push up above the weekly open, or they give us a sharp push down, right? If we see a sharp push down, that's low-key giving me signals of like low of the week type action, and I'd be paying attention to them sweeping below the sell side liquidity. I have mapped out here on the 4-hour, we got some sell side liquidity over here that they haven't really traded below, right? They kind of like whipped to it a little bit here, but they haven't necessarily traded below it, so I keep my eye on that. But at the very least for right now, I can kind of keep my eye on just this nice little order block right here. All right, that's something I can kind of keep my eye on. But that's if we see them drop down, if they're gonna use it as support, then kind of just not seeing them come anywhere below that order block, or if anything, sweep this sell side liquidity. But if we see them give a sharp trade higher going into Monday's price action, I would be paying attention to how we respond in this fair value gap, right? Is that fair value gap going to be resistance? And if it acts as resistance, then we can see some opportunities as they reject off of that level to trade lower. And if they going to trade lower, that means higher prices on gold, higher prices on NAS, higher prices on GU, continuing to see those highs, them give higher highs as they've been delivering. So I just kind of want to have my eye on this fair value gap here. And I want to see if maybe we can target this open of May potentially, right? That's kind of like, that's where my eyes are. If they're gonna be bearish, if they're gonna go bearish just a little bit longer, maybe even sweeping below the sell side liquidity here, or just down into that action. Because just like I put down on the other chart, the higher time frame chart, if they are going to long term go bullish, they really should not trade anywhere below that May open, if they're going to go long term bullish. So, but I could definitely see them having just a tad, a little bit lower to go when it comes to when it comes to this bearishness that we have, right? And the reason that I had said earlier, I'll come back to like what Federal Chairman Powell was going to say, is because Sir Powell this week is probably going to be talking about the reasons that they didn't raise the interest rate, because he's testifying. He's talking about what happened last week, and he's going to be talking about the reasons they didn't raise the interest rate. And I feel like a lot of people can find optimism in that. And we can see continued, rises in our assets, which means people selling off dollar to get into gold, get into these companies, investment stocks, foreign currencies, because foreign currencies will also be continuing to raise their interest rate. Last week we saw, Euro Central Bank of Europe continue to raise their interest rates. This week we're seeing GBP continue to raise their interest rates. So just initially off rip, I could see that being like people wanting to offset money to other assets. But with all that being said, and just reading the room, like I said, it all aligns with me saying long term though. Definitely see them like using that as again, like, if the majority of people are selling the dollar, who do you think is buying it from them? Right? So always keep that in mind. But that's my take on the dollar. Maybe see us trade above the weekly open, respect this fair value gap here, and then trade lower from there down to May's open. That would be like the perfect vibe. And just keeping my eye as well on this, from this buy up right here, that buy up there, that gives me an order block, right? Mitigation level. So inside that fair value gap, the strongest area of resistance that catches my eye is that previous low on the dollar. So if you guys are on your own charts or looking at this throughout the week, I just say keep an eye on that TVC level on dollar 102.67, and let's see if we can get some action from there, man. Let's see if we can get some action. I did forget to point out though that as far as like when we're coming back, draws on liquidity for the dollar, we do have this nasty gap here on the dollar. So if we see opposite price action, like if we see price action drop first, give us a sweep on the sell side before even coming up to that fair value gap, then I'm gonna just be honest, they'll probably just run straight through that fair value gap. And whenever we see a fair value gap get broken, we can kind of see that as a flip. And so it becomes an area of support instead of resistance. And then we would then be targeting for them to come up to those, to these highs here, right? If they break that area, support, and then take off from there, right? So that's what I would be keeping in mind as we kind of go into this week on the dollar. And with that being said, let's see what I like. I haven't had a chance to really look at my pairs. You see, GU was not effing with me last week. Snapped my neck on Tuesday. But we can wipe everything on these guys. Oh, I will put on dollar chart. I will put this in the watch list. I'll do that after. But looking at Euro and GU, if you notice on my watch list, I have what I can use for higher time frame perspective, and then I have what I could use for intraday, just so I don't be confusing myself, because it can happen. You can definitely Definitely start confusing me. All right, so I'll start with EU because it's the most commonly traded forex pair. Um, but just looking again at the higher time frame on EU, where could we be delivering to right now if the dollar is gonna drop just a little bit, just a little bit lower, just a little bit. Keep in mind we have that monthly buy side liquidity here. But then going down into it, I mean, we're already past the median threshold. That's what I was trying to remember last week. What the 50% of an order block is called? It's called the median threshold. And this order block, they already passed that. They already kind of being a little aggressive when it comes to that, the middle of that thing. So, so yeah, I'm just. Let me see something real quick. This was the open of May as well. May open. All right, so that monthly buy side liquidity is also the open of May. So we can keep that in mind on the weekly time frame. On the weekly time frame, we saw them trade back down into this discount level on EU, right down to the 78. Also back to this breaker block over here. Saw them trade down into that. I mean, you clearly see this is an order block here. They traded down into it, gave a strong rejection from it, and have not delivered to any buy side yet. So I'm gonna keep my eyes on this good old level here, which was the top of this candle. What is that? 108.06. Let's keep my eye on that. That's the 50% of that whole buy up as well. Yeah. See, EU, I was so interested in seeing the sell-offs on EU because of the way that they had taken the buy side liquidity on this side, right? This is what I talked about, I think, last week. And we could see that they missed it here. But then or the beginning of May's open, they literally swept that level, came down, gave us a higher low out of this entire thing, gave us a higher low, and literally just like straight propelled back higher. I was anticipating potentially seeing them now after sweeping buy side up here. I was anticipating seeing them drop down and taking the buy side liquidity here. I mean, the sell side liquidity there. But I was wrong. I was wrong. It looks like they've had this uptrend going since October. Maybe there's something more that they are looking for. So yeah, I had to be aware of that. But that's the range that we're trading in. Interested to see how the dollar plays out. Definitely interested to see how the dollar plays out. But I will point out that dropping down to the daily, we again, even with EU here, got this nice little fair value gap sitting right below EU, aka imbalance, whatever, right? And is that let's see, where did I have this little buy up from? Okay, it's not the same level, but yeah, I want to pay attention to how they trade in this fair value gap, similar to the dollar, right? Like I said, dollar trade back up into this fair value gap, or first do we drop? And from that drop, do we then, go ahead and trade higher and straight through, because they get so much liquidity from dropping down into a level like this that they can then just go ahead and propel higher? Or do we trade higher up into that fair value gap first? If the dollar makes its move up into this fair value gap at the beginning of the week, and I see EU, give me a trade lower down into this fair value gap, that's something that I'll definitely, that's an opportunity that I'll be paying attention to, right? That potential buy opportunity off that fair value gap. But if I see, Euro USD sweep higher, potentially sweeping higher, above that monthly buy side level, which we have right here, which is May's open right here. If I see them trade up to that, above buy side liquidities here, above the buy side liquidities right here, that's from May 10th. Got some buy side here, got some liquidity up there. So if I see them start off the week like that, then yeah, I'll definitely be looking for my sell opportunities. Because like I said, long term, I want lower EU, lower dollar. You feel me? But nah, if they drop down first and come into this fair value gap, then yeah, I'll be looking for some type of, on the lower time frames, I'm gonna be looking for them to form what I want to see: an order block higher, engulfing candle higher, 8 a.m. in the morning, 7 a.m. in the morning, and then take my opportunities off of that. And just keep it simple. Just keep it simple, man. It's literally, we got these higher time frame perspectives, so just a matter of what they give first, right? So key levels on EU to pay attention to. Got the buy side liquidity, aka May's monthly open up there. And let me make sure my thing is still on. Wow, that's crazy. This be like, just be like life. Let's see. For some reason, this is not recording my trading view. All right, so we fixed that. But yeah, as far as EU goes, like I said, fair value gap and monthly buy side liquidity may open. Two areas I'll be looking for. Let's move on. And GU. Word. Trading view trying to close me. All right. So GU. GU is an interesting gal. All right, GU is interesting. Look at the monthly time frame on GU. We're in a monthly fair value gap right now. All right, pay attention to that. Close out trading. Brave browser. Yeah, monthly fair value gap on trading view. From the high to the low on this monthly, we're right inside that optimal trade entry for potential bearishness. And even using GJ as an indicator for, not as an indicator, but just using GJ as well. Like GJ has had this just absolutely ridiculous buy up, and we talked about this last week, right? Seeing them come up to this red zone itself, coming up to this potential monthly buy side liquidity. GU's been just absolutely going freaking ridiculous. I mean, just in the last 2 weeks, GU's done almost 1,000 pips in one direction. So that's definitely, I wouldn't say just manipulation, but that's definitely, some sort of manipulation or big, somebody big stepping into the market. So we definitely can pay attention to that, and kind of the same thing on GU, right? Strong bullishness higher up into these premium levels. So I definitely want to pay attention to where they're going, A, and B, how we respond inside of all of this. So looking at the daily time frame, we've been bullish AF. Next real area of liquidity for them to deliver to is up there at 30.66 Yeah, 3066 if they're not gonna respect this fair value gap. But it's so bullish right now. Same thing as I said on dollar. I just want to see how the dollar is going to respond, and I'm like really, I'm not going to say super certain, but I'm I'm probable on the dollar continuing lower off that fair value gap because of how strong these things are. But again, if not, then it would be just the same thing on GU, just reverse, right? Looking to see, I can't see right now, I can't see a bearish opportunity on GU right now. The only opportunity I can see on GU is this fair value gap here, which would mean, again, same thing, right? Lower trade down into this fair value gap, and then just identifying buy opportunities out of that thing to the high side, just to be real, right? The only type of way that a bearish scenario could maybe play out is if we see a bearish engulfing, right? That takes us below this fair value gap. And then from there, we could potentially see a bearish opportunity. But for right now, they're bullish, super, super bullish. So just paying attention to that daily fair value gap right there would be the zone that I'm paying attention to. And then seeing an order block forming there to take us to higher levels. I mean, clearly that 30, 60, 66 is the higher level to pay attention to right now. That is like 300 pips. What's that weekly time frame look like? Yeah, this weekly candle here. Wouldn't be surprised to see a bullish weekly candle. Not even gonna lie to you, but yeah, we just gonna pay attention to how they come back and retract into this fair value gap. Like maybe we see something like this, like a little wick, like a little candle like this. Maybe we see like a little candle like this, like with a wick down into this fair value gap, and then like a bullish candle up into this somehow, right? Something like that. Right? Maybe we could see something like that this week on GU. Don't laugh at my candle, all right? I know how y'all get. Don't laugh at my candle, all right? But that's the idea of what I feel like we can maybe be paying attention to. So what is that on GU? 2722. Is that box paying attention to or not? Yeah, 2770 basically paying attention to that. So yeah, that's GU and EU. GU and EU. Yo, I got these mosquitoes, man. All right, so that's GU and EU. Euro USD. I mean USD JPY. Dollar doing dollars. This is very, 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 very interesting, right? Very, very, very interesting. Actually, signs of a potential reversal. I still need to do a little bit more of understanding on that, but either way it goes. So right now, USD JPY, we saw them trade above this monthly buy side liquidity. All right, and then from that monthly buy side liquidity, we saw a sharp engulfing candle lower. They never traded back up into this fair value gap or back into this order block, so it just left a fair value gap. So that's where we're at right now. Whoa. All right, that's where we're at right now. Keep my eyes on that. Keep eyes on that. Honestly, the weekly gives it even better. Look at that. Fair value gap right here. All right, we could even just pull it up to here since 2 candles. So I'll be paying attention to that zone. Where was May's open? Because May's open seems to be, May's open is way below us. Okay, we're gonna leave them alone then. But that was the open of October. So we'll just say this was also October's open. All right, and October was, that in a way is kind of like a mitigation candle, I guess you could say. right? Because that was the order block that took us up before the big drop. So the open of this candle right here is kind of like it's orders pending there. You feel me? So we can kind of keep that in mind, right? Like, yeah, that was this right here is that breaker block, the order block that took us higher, right? We could pay attention to that. Bingo. Bingo. So yeah, we could pay attention to that. That's like that's like 237 pips to the upside. So maybe they don't even make their way up there. Let's see. We got buy side right here. It's been a minute since UJ has been this high, actually. UJ hasn't been this high since November. They just been trekking their way up. But yeah, it's not in alignment with the dollar. It's so not in alignment with the dollar. Like, we look at the dollar and we look at UJ, they're supposed to be going the same direction, but they're going opposite directions. You see, dollar is dropping while UJ is, while UJ is trending higher. And the reason for that is you just saw me pull up the JPY chart. JPY has been dumping like AF. Oh my goodness. JPY has been dying. Like, what? Look at last week. That was disgusting. That's the reason GJ is going crazy like that. Let's look at this little JPY chart real quick. Interesting play on JPY. I don't even think I have another JPY chart to go off of. But yeah, right now JPY is swiping below some sell side liquidity, and I can't really see anything other than that because I don't have any past history. But yeah, that's the reason that it doesn't matter if the dollar is dropping. JPY has been dropping way harder than the dollar, so this clearly is not going to matter. So that's why we're not seeing correlation between the two. So if JPY is going to continue to drop, then we might actually see it go the opposite of the dollar still. And I don't really like that. I don't really like to trade UJ when it's not trending with the dollar. You feel me? So UJ might be a really beautiful buy opportunity if JPY continues to drop and the dollar continues to go higher. That would make it. But it'll be a pretty beautiful selling opportunity if the dollar comes up to that fair value gap we talked about, and the dollar continues to drop, and JPY starts to go ahead and trade higher. You feel me? Like that could actually be, a good play. So just kind of keeping my eye out on how the dollar responds this week will kind of determine which one I like better. But, this divergence here, like the way that UJ is divergent from the dollar, it could be showing us some it could be showing us where money is being moved around. But I'm not a master on divergence yet, and I'm not going to claim to be. So I'm just going to react to what the market shows me. You feel me? Just respond to what the market shows me. Keep it there. So yeah, that's the currencies. That's all the currencies I care about. If y'all want me to look at some other currencies, you're going to have to talk to me. But I'm a NASDAQ buy. Matter of fact, I'm going to go to gold. Because gold was acting right last week, man. She was trying to get back together, man. I ain't gonna lie to you. She wanted us to get back together. I told her, I don't know, girl. You be acting up. So gold's looking like she acting like she want real all-time highs. And on the monthly time frame, you can clearly see they did sweep just a bit, right, over the all-time highs, right? We came up to 2080-ish on this FX IDC chart. Just up to right there. Now, here's what I'm gonna say about gold though. All right, if the dollar is gonna continue to drop, then gold might be a continued good buy opportunity. Starting to consolidate. Last week it was still good opportunities in there you could have just been paying attention to. Still some good opportunities, but yeah, after seeing them go ahead and sweep down below the sell side liquidity here, that was the low of May, right? They swept the low of May, Bang, gave a fire opportunity on Thursday. And guess what they left for us? They left us a little present. You heard? Let me go to the hour and see if it looks better. That is a massive freaking fair value gap. All right, so yeah, just look at that. That is massive, dude. Crazy. So one thing I know is that they're going to want to trade back into that. So that might give us some opportunities for quick sells on gold tomorrow, right? Quick sells on gold. But that's that could be a real sweet what is the word, support for us to target some highs, right? But just be careful, because like look at this nastiness since we've gotten into June, just straight ugly. But the daily buy side liquidity I'll map right here, and that was let's see, June's open. No, June's open was right about here. We just traded up to June's open. I'm gonna put that on my chart too, just so I could be aware of that level. Uh-oh, my computer's getting mad. Let me unplug it. Yeah. And consolidations can be cool, man, because they sweep one side, they sweep the other side, they sweep one side, they sweep the other side. Consolidations can be cool, right? So clearly we saw them sweep this side, then they traded higher, and they swept the side, right? Right here. So here's what you could pay attention to, right? To come back down into that fair value gap, because even if they are going to go ahead and trade up to the buy side liquidity up there, eventually, especially if the dollar is going to really give us a nice little drop, then you could pay attention to them trading back down into this discount level. I'm telling you, me and gold, we go together for real. You feel me? She really rock with me. It's my little girl, right? So you could pay attention to them trading below this 50%. 50% of sweep on May's lows. Bang, right there, right? So we could target that. We just saw them come up, sweep these highs here. From June, traded right up to June's open, and then they gave us an engulfing candle, right? So a sweet little shimmy would be if they trade back up into this order block right here, right? Because that was the buy up, and then engulfing moves down. Yeah, it's not even clear on that chart, on the daily chart. And they kind of already, they kind of already did it on the 1 hour time frame. But like you see, they dropped down, boom, traded right back up to it. But let's see, 50% of this little box. I don't want to see them come up above that for a decent sell opportunity. You feel me? So that would be a dope opportunity if they do something like this in the right kill zone, right? If in the kill zone, get something like that in the kill zone, execute it. That's a nice little 1 to 3 right there. Feel me? Yay, sir. So yeah, that's what I'll pay attention to. And then if they're gonna take the buy side liquidity for real, then I'm gonna be paying attention to I think it would be this top of this candle right here that I want to be paying attention to. Right, I would even like argue up here. You feel me? Pay attention to that. But real talk, if they're gonna continue higher to that buy side, and it's not gonna just be BS, they really shouldn't trade no lower than right there, like that little spot right there. So on the way back up, Yeah, consolidations can be cool, man. I ain't even gonna lie to y'all. They can be cool if you know what you're doing. But that's what I would say on gold. Yeah, potentially seeing them sell back down to that, at least that 50%. And this gap is ridiculous. I'm gonna just be honest. I mean, you could even see if you go hold some partials down to the low of that thing. That's a good 1 to 6, but you could still just be tranquilo, calmate, just real calm. You could still take you 1 to 3 on that. So that's gold. That was easy. Ain't gotta pay too much attention to that. But I can see why gold is doing what it's doing, because like JPY is dumping like that, and the dollar's also dumping. It's like, if they're not gonna buy yen and they're not gonna buy dollar, they should be buying gold, don't you think? Yeah, they should be. Gold's a safe haven currency, nice little accumulation. They swept the downside. Definitely would love to see them trade higher. So that's what we'll keep our eyes on for this week. Same thing as Euro USD and GBP USD. I just gave a potential idea on that sell, but like overall for real, like the real bomb vibe on gold would be if they really came down to like say that level here and then respected there. That's like 67 pip stop, and they were gonna trade back up to that buy side. That's a good 1 to 5. Yeah, man, come on, gold. We might be able to get back together if you act right, for real. So here's what I'm gonna do. Put an alert, 1955.2. Oh, I hate when I do that. Calm down, guys. We're not taking a trade. 58.10. It was 58.10. Yeah, it was 58.10. Gold chain, gold tee. Okay. Yeah, no, we gonna get to Nas in a second, bro. I know you like Nas. All right, and then for the buy, 1938, we'll say. Watch, man. I'm finna pay for me some dinner this week. I think this is a game. I'm hungry. No, like literally, I'm hungry right now. I'm gonna have to go get something to eat after this. But I'm hungry. All right. They say don't trade while you hungry. But y'all talk to me, man. Is this making sense? Y'all with me? All right. So now, the moment we've all been waiting for. You heard NASDAQ. All right. So when it comes to NASDAQ, oh NASDAQ, you girl, oh you. Let me look at some stocks real quick. Look at some stocks. Is Apple stock at all-time highs yet? Yup. Apple stock officially at all-time highs. I already know where I want to see this thing. I want to see these things crash. No cap. I'm ready to see these things dump. Apple stock at all-time highs. Tesla almost at those 12-month premiums. So we might got a little bit higher to go. What about Meta? Meta almost also at all-time highs. Meta almost at all-time highs. Yeah, they might have a little bit further to go. People gonna have to see them things reach all-time highs for real. Dang, somebody had put me on game with this stock since it was at $7. Sheesh, Maverick, that thing doubled, boy. All right, but anyways, so NASDAQ. If Apple got some highs to get still, Meta got some highs to get still, we'll keep that in mind. We'll go ahead and drop. Oh, I don't want to do it on this chart. This is my daily trading chart. I'll put it on this chart. So NASDAQ, we look at monthly buy side here. Drop to the weekly time frame. This thing is so bullish, it's not even funny. They finally found some daily buy side liquidity though. Maybe they drop a little some, you know. Let me see if they took. Did they come to that high? Yeah, they came up to that high. Maybe they drop a little something, you know. Maybe daily fair value gap. So we'll just take these things into account. Got a daily fair value gap there. So yeah, I could see a similar little vibe as gold. Like maybe seeing them trade a lower just a tad bit. Just a tad. I don't know if they're going to come all the way down to these though. I don't know about that. You got this fair value gap right here too on the hourly though. It's a smaller level. All right, let me go back to the daily real quick. Yeah, that do look smooth, especially after taking that daily buy side liquidity. Drop down to the hour. Yeah, they could maybe make a run for the sell side liquidity right here. They could do that, especially after we saw them trade both above these daily buy side liquidity levels from last March. Sharp move higher here. You can see this was the order block. They traded back to it, respected it, dropped off, gave us a lower low. Let me see if they trade higher. We have two zones to pay attention to. Well, first, right here was that order block out of that daily buy side liquidity. Right, next candle, they traded back up into it just a tad. Slide, man, beautiful slide. All right, and then they left this nice little fair value gap here on the 1 hour time frame. Bang. All right, so order block here already got traded into, then they dropped, gave us a lower low. All right, so now we have some buy side, and then above that buy side we got a nice little fair value gap. Yeah, this is sweet. All right, buy side liquidity. So yeah, we could target that, you know, even, and just for argument's sake, from the high of that order block down to the low, that's just up in the 50%. So that would be smooth. Stop loss above the high of that fair value gap, 20 pip stop, kick them down to there. That's a smooth 1 to 8. You could even widen the stop loss a little bit if you wanted to, but nah, they shouldn't trade above that fair value gap if they with it for real. So we could just say 25-point stop loss on NASDAQ. Might be looking for that. And of course, I mapped this out on the hourly time frame, so that doesn't mean that. I mean, if you could, it is a nice hourly setup. I'm not gonna lie, 27-point stop on an hourly is beautiful. But more so, what I'll be anticipating is for them to trade up into this, and then on a 15-minute time frame, I'm gonna want to see them give some type of order block, and then I'm gonna want to execute off the order block, and that's kind of what I would want to see. So yeah, that's what we got on NASDAQ. This week, see, this is when you wait on the FOMC weeks, you get real clean looks like this, man. So I think that's all for me. I don't see anybody with questions or any specific thing they want me to look at, so I'm ready for the week. I see what I'm looking to see here. Like I said, man, you guys already know, 8 p.m. Monday through Friday this week, we're going to be going over some keys to trading a cash account, because I think we're giving a lot of value as passing the funded evaluation. Definitely want to also give value as to how to actually be profiting on a week-to-week or month-to-month basis when it comes to your cash account, as well as like different brokers, just the difference between different brokers, psychology, all those vibes, and as well as this trading model that I just actually used for gold and for for NASDAQ, I'll be breaking that trading model down on Thursday at 8 p.m. specifically. So you guys can look out for that. I'm gonna send the schedule in the hub or in the announcements chat so that y'all can see that. But that is all that I have for today. So I appreciate y'all tapping in, and we will be live for another market outlook next week Sunday at 10 p.m. Well, we're deciding it might be 8 p.m., but for right now 10 p.m. because I couldn't announce it here. Also, we did pick a raffle winner for the $50 for the first individuals that participated in our raffle, but the winner was a founder. So what we decided to do was that I'm gonna take the $50 that they won and they're throwing it back into the puddle. So when we hit 100 followers on Instagram, we'll be actually doing a giveaway for $100. So that's pretty dope, right? Well, actually, that's pretty dope. And then, of course, the 10K giveaway for the 10K funded account is still going once we reach 250 subscribers or followers on our Instagram. We'll go ahead and put that out so that, you know, we can go ahead and celebrate, you feel me, the new following on Instagram. But with that being said, I appreciate y'all tapping in. Like I said, if you're in the guild, we'll be live tomorrow. I'll be on the trading floor tomorrow at 8 a.m., probably 7:30, honestly. And then Tuesday through Thursday, I'll be in there. And then we'll have our trainings at 8 p.m. Each day this week, and Q&A on Friday. So appreciate y'all tapping into the Traders Guild. And yeah, we're live.